Okay, good morning, folks, and welcome to a morning update and member stock chart request. This is where I review the symbols that our members submit for me to review. Let's kick things off with the pre-market activity, the 10-year bond. It broke out overnight, out and above this upper band of resistance on this 4-hour chart. I'll be using 4-hour charts mostly with the pre-market activity. So what this means is that we're seeing a little bit of pressure, not all that much, but a little bit of pressure on yields. The dollar, it managed to rally back overnight. And I was rather surprised to see the strength in the dollar continue after the Germans agreed to a coalition government, because it had been adding some pressure to the euro, but the dollar is holding up. So what we're looking for here, let's go down to a 30-minute chart. What we're looking for here is a breakout. Do we break out above yesterday's highs, or do we put in a lower high? If we put in a lower high, do we break back down below this lower band of support? If we do, in all probability, we're going to break the neckline here and move lower. Now, why am I calling it a neckline? Because we were forming a head and shoulders setup, left shoulder, head, right shoulder, but the head and shoulders setup for all intents and purposes has been negated, especially if we see a 90 handle and on a closing basis on the dollar. That's a psychological resistance level. The euro sold off on the news out of Germany, which I was surprised to see. It's now catching a bid. Let's pull back to a 4-hour chart, get that higher level view. But net, we are weaker. We did break down below a key support level. We didn't even get a knee-jerk reaction out of the euro on the news. It just became weak and stayed weak. The yen, we're in an ever-tightening triangle formation. We're off the highs of the period. Gold, I don't know what's going on here. One would have thought that gold would have been a flight to safety during this crisis, but they went to the dollar. It's simply not making sense. So I guess what we should do is add another $1 trillion worth of debt on top of the $1 trillion a year deficit so the dollar goes higher. I just simply don't understand why the dollar continues to be viewed as a safe haven trade versus gold. Now, the other side of the story here, let's go back to the dollar really quick, is that if this crisis would have occurred 10 years ago, you would have seen the dollar dramatically higher than where it is right now. So on a relative basis, it is weak. However, relative to gold and other currencies like the euro and the yen, it's holding up pretty darn good. So I'm nobody to argue with the market. The market is always right. The NASDAQ futures, a little bit of pressure here. We remain in the triangle formation. We're retesting the lower band of support. And it's a type of volatility you would expect to see in this market environment. So no shock here. The Dow futures, very similar. We managed to break through resistance yesterday. We're consolidating there. We are seeing some pressure this morning, but not a tremendous amount relative to the pressure that we've seen of late. It's really the price action you would expect, backing and filling. And as we back and fill and put in higher lows, that builds confidence. Confidence begets momentum. So while it's easy for me to jump on the bear train and say, wow, the Dow futures are down triple digits, I prefer not to go there. What I really care about is where the market closes. So if we rally back and we close positive on the day, that's a very bullish day. So let's revisit how the Dow is closing at 3:55 p.m. Eastern Standard Time, and then I'll have an opinion. Right now, we're consolidating. We're holding support. Let's keep an open mind. If we start breaking down below the support level, well then, that's a different story. Let's get to the charts from our members. First up, Costco. We talked about Costco back here when it broke out above resistance. We were bullish, and it rallied strong. I did not trade this, but a couple of members of ours did. And now it has since pulled back, and we recaptured this lower band of support. Would I buy it here? No. Why? It's because we're too close to resistance. So the risk to reward is not in our favor. Now, to the weekly chart, if we manage to rally and close back above this upper band of resistance, I would buy it there. But as it stands right now, it's in a bit of no man's land. We have 3 trading days left to go. Do we give up the gains realized so far this week, meaning off of the lows of the week? Or do we relinquish them? We don't know yet. So patience. Let it back and fill. The markets will send us a signal. Decker's daily chart. An amazing chart here in that while the markets have been under unprecedented pressure, volatility, Decker's has held up very, very well. And in fact, we retested the support level yesterday. It reversed, and now we are poised for a breakout. So I would buy the shares on a breakout. Look at the volume yesterday. Past 3 days, no less. So there are good things going on here at Decker's. Weekly chart. The prior week we saw some topping action, some resistance. This week, same deal here. So again, I would wait for the daily breakout and a close above resistance. And unlike pre-correction, I would stay small and keep stops tight. If we close down below the lows of the week, I would really consider stopping out. And if this market rolls over, even if we do break out here on Decker's, I would avoid it because at some point in time, if the selling gets really heavy, Decker's will succumb in all probability to that selling pressure. So I wouldn't fight the overall direction of the market. Consumer staples, weekly chart, we stopped out with a profit, a slight profit, on a close down below $58 per share, and thank goodness that we did. Now, while we reversed off the lows of the week, we have not yet recaptured strong support. Let's go to the daily chart. What we're looking for here is a close above 55.18 per share. Now, you can see that we held on to 2 support levels. So for those that are new to trading, what does this all mean? It's resistance levels, support levels. In short, look at it this way. We have an army. That army went into battle and it lost the first couple of rounds. It had to tactically retreat and call in the reserves. The reserves were down here. The reserves moved in and were able to fight back the enemy, but the enemy sits back here. The enemy are sellers. They bought here. They saw their trades fail. Now they want their money back. So they're going to try to overwhelm current owners of the XLP and drive them back down. When do we know that the XLP, the battle is over and we have the enemy on the run? When we close above $55.18. That means that all of these sellers back here have been overwhelmed by buyers. So that's my analogy. I'm sticking to it no matter how poor it is. Let's watch for a double bottom setup or a W formation on our Stokes. Visa, weekly chart. We rallied off of the lower band of support after it began to go parabolic. Now, would I buy it here? No. Why? The reason is that we are at current right up and into the upper band of resistance. So really, what's your risk to reward? Daily chart. We closed right at resistance, and you're going to see this on many of the charts that you're looking at. Take your crayon out. Take a moment. Visualize where they rallied off of, your favorite stock, your favorite index. Where did it rally off of? In all probability, it rallied off of support. Where did it close or have a daily high? Probably right at resistance. So do you want to go buying a stock into resistance? No. We want to wait until we're able to overwhelm these sellers and then look to buy on strength. Now, if we pull back, retest, or put in a higher low on Visa, and we hold the lows of the week, well then, that's a good risk-reward entry point because we know exactly where to put our stop, right below the lows of the week. Both lines on Stokes trading down below 50, so what does that tell us? Rallies fade. Baidu. I am not loving Baidu. Let's go to a weekly chart. I always talk about this, that the markets send you signals. And what are those signals? Well, we have double tops on our indicators, RSI and Stokes, but more importantly, we have it on price. The prior high, 274.97, new lower high, 265.77. This week, we broke down below this lower band of support. Now, we have 3 trading days left to go. If we close down below 226.01, that is a confirmation breakdown on a weekly basis. That's serious stuff. Now, if we manage to close out the week above the support level, well, then my tune changes. So what really matters right now with Baidu is where we close the week out. Do we close it above support or below support, then making it new resistance? Daily chart. Now, much like we saw on the other charts we've gone over, we rallied off of support. But in the case of Baidu on a daily chart, we managed to rally through resistance, which is a good sign. But we have more sellers above here. So I'll be watching for a consolidation, a bottoming setup on Stokes, meaning a double bottom setup like you had back here, like you had back here. So I don't see a rush to accumulate shares here on Baidu. SOXS. We were long of the SOXS. It puts you short of the semis. We got in right at the bottom. We did not enjoy the entire ride higher, so I can't make that claim. We are putting in higher lows on both Stokes and RSI. No breakouts yet. And we are trading well off the highs of the week. We have given up our breakout point. When would I buy the shares? If we manage to close above this resistance level here. And it's not that far above. If we see a 14 handle on the SOXS in the final minutes of trade on Friday, I would become more bullish. Daily chart. A bearish key reversal yesterday. We're retesting the breakout point here in dotted blue line. Does it hold? That's the question. I don't think we're going to see a straight shot higher today. I could be wrong there. We are looking to put on a trade here. So what I would be looking for on the SOXS is, again, a 14 handle by the end of the week. If we get it, I would consider opening up a position. Right now, all I'm looking at is a failed breakout. It's a little bit cold, but that's the way you need to look at it. And that's it, folks. Members, I will speak to you this evening on Market Wrap, and I'll be in the forum later on this evening as well. Everybody have a profitable trading day, and I'll talk to you soon. Be well.